All right, let's dive right in. Welcome to The Explainer. Today, we're taking a deep, analytical look at the real world of systematic Forex trading. We're following GoldMining Loonie, a live USDCAD cent account that's documenting its long-term, completely transparent journey toward a 10,000 cents or $100 milestone. This isn't one of those highlight reels promising overnight riches. No, this is a real trading documentary. We're going to see the profitable weeks, the inevitable setbacks, and the rigorous discipline it actually takes to navigate a full recovery. And this slide right here brilliantly illustrates our core theme for today, controlled recovery. Look at the phrase on the screen, small wins matter. Because, when an account is in a rebuilding phase, the temptation is always there to just over-leverage, chase the market, and try to make it all back in one fell swoop. But this account operates on a totally different wavelength. It's all about a disciplined, controlled strategy where steady, incremental wins are absolutely crucial for long-term survival. So the magic number for this week's performance is right here, a definitive 1.01% gain. Now that might sound small at first glance, but in the context of institutional-style risk management and steady capital recovery, bagging a 1% weekly return is a highly efficient, incredibly respectable metric. It basically proves the system is working exactly as intended. Section 1. The Week in Review, looking at the performance data. Looking at the raw RoboForex MetaTrader 5 weekly summary, the account closed out the week with a 21.75-cent profit. That nice incremental bump smoothly lifted the total balance up to $2,169.03. And get this, it was achieved across just 4 closed trades. It's a perfect example of surgical precision in the market. You get in, you take the profit, and you get out without overtrading. Now follow the green growth line on this chart as it makes that steady 1.01% climb. But honestly, guide your eye to the red line down there. That is an incredibly low weekly drawdown of just 0.274%. This really highlights the precise, stress-free nature of the week's trading. And remember, this low drawdown happened during a week filled with shifting macroeconomic winds. We had Federal Reserve interest rate expectations bouncing around and shifting economic outlooks from the Bank of Canada. Navigating those choppy waters with barely 0.25% in drawdown, that's a serious testament to the system's stability. And looking at the gross profit breakdown, we can see exactly how the math shakes out. That big green section shows a gross profit of 34.47 cents. That easily absorbed the tiny 1.59 gross loss and the 11.13 in swap fees to net that positive 21.75 cent result. It's just a super clean, profitable ratio that really demonstrates the strategy's edge in action. Section 2. The broader recovery story and the historical context. Transparency is what makes this specific documentary so compelling. We are openly addressing the current lifetime performance here, which is currently sitting at minus 12.08%. But we aren't framing this as a failure. Not at all. Instead, this is the inciting incident for the current recovery arc. It's just the reality of real trading, right? Setbacks happen. The true test of a system and a trader is how they respond to being in the red. Notice the historical 35.73% drawdown spike in red right here. That's what necessitated this entire disciplined rebuilding phase. The system took a hit, sure, but rather than breaking, it adapted into a controlled recovery mode. And now you see the green line stabilizing and beginning to tick upward, representing that careful, calculated effort to climb back to break even and beyond. Which brings us to the guiding philosophy of the GoldMining Loonie account: consistency over aggressive recovery. The system deliberately avoids reckless, oversized trades that attempt to win everything back at once. It goes to show that real trading is fundamentally about marathon endurance, absolutely not a desperate sprint to the finish line. Section 3. Analyzing the executions and USDCAD volatility. Okay, let's look under the hood. On the left, you can see a steep USDCAD downtrend visualized on the 15-minute chart, marked by those blue and red cell arrows. On the right are the 4 executed trade receipts. The system intelligently correlated its entries with this steep drop. And let's think about why this happened. This downward slide in the USDCAD pair was heavily influenced by the broader macroeconomic backdrop, specifically the ongoing tug-of-war between US dollar strength and wild fluctuations in global oil prices, which directly impact the Canadian dollar. The system read this volatility perfectly, deploying 4 tactical short positions to lock in the profit as the market fell. breaking down these specific lot sizes, we've got volumes of 0.02, 0.04, 0.02, and 0.02. What's absolutely fascinating to me here is how the single 0.04 lot trade did all the heavy lifting. It generated the bulk of the profit at 25.20 cents during that downward slide. The smaller 0.02 positions, they just acted as calculated probes or partial entries, safely accumulating an additional 4.72 and 4.55 cents, while keeping the single gross loss contained to just a minus 1.59. It is incredibly methodical. Section 4, a masterclass in risk management and preserving capital. Looking at the lifetime deposit load, the gray peaks at the bottom represent the margin used to hold trades. Pointing this out is vital because despite past volatility and that historical 35% drawdown we discussed earlier, the system has historically maxed out its deposit load at only 2.41%. Think about that for a second. Even in its most stressful moments, nearly 98% of the account's margin was completely untouched and fully available as a safety buffer. And if we zoom into this specific week, I want to emphasize the microscopic risk that was actually taken. To secure that solid 1.01% gain, the maximum deposit load barely even registered on the chart. It peaked at a mere 0.334%. The algorithm basically didn't even break a sweat to pull capital out of the market. To summarize this direct relationship, very low deposit utilization equals controlled drawdown. By keeping margin usage exceptionally low, you successfully prevent major equity swings. It removes the emotion, it neutralizes the margin call risk, and it allows the mathematical edge of the strategy to simply play out over a large sample size of trades. Section 5. The 10,000-cent goal and the ultimate objective. Here is the strategic roadmap mapped out clearly for us. Step 1. Rebuild steadily from the drawdown, which is exactly the phase we are analyzing right now. Step 2. Reach 10,000 cents or the $100 mark. And step 3, launch this proven, battle-tested system as a robo-forex copy trading signal. So this week's balance of 2,169.03 cents isn't just a random number. It is a necessary, hard-fought stepping stone on the path toward that 5-figure cent milestone. And as a quick reminder to everyone, real trading documentaries show the grind. Notice the purple equity line here at 2,102.46. It is steadily and healthily converging right back with the blue balance line. It takes time, patience, and unwavering discipline to close that gap, but the trajectory is moving exactly in the right direction. Which leaves us with a final, rather provocative question. Will this disciplined approach weather the next macroeconomic market storm on the long road to 10,000 cents? Markets are always unpredictable, but as we've seen today, when a system is built on low deposit load, tactical execution, and a philosophy of consistency over aggression, it certainly stands a fighting chance. Thank you for joining me for this breakdown on the Explainer. Keep learning, stay focused, and I'll catch you next time.